Hello and welcome to the next episode of the Primis Propositions podcast here, the Lion Roar. I'm Matt Brown, Head of Proposition, and as ever, I'm joined by Nikki Hemmings, Proposition Manager. Hello, Nikki.
Hello, Matt, and thank you for that. And as Matt said, again, welcome everybody to our new episode of Hear the Lion Roar.
Welcome indeed. So today we've got a very topical subject that we're going to be talking about today. We're going to be talking all about the cost of living crisis. We promise not to be doom and gloom, but we're going to be real today. And Royal London have been doing quite a lot of work in this space. So I'm delighted that we're joined today by Gregor Sked, who is the Intermediary Protection, Development and Technical Manager. And I said that with my teeth in. So hiya, Gregor, how are you?
Hi, Matt. Spot on. Well done with that job title. That's one of the ones that I struggle with. So you nailed it. I'm absolutely honoured to be here. So a real privilege. Thank you so much for having me.
I promise I didn't look at my notes, Gregor, to read that.
I usually have to.
Good stuff. So, Gregor, I guess a real good starting point for today is before we get into the nitty gritty about the cost of living crisis, is tell us a little bit about yourself, mate.
Yeah, always an interesting question to start with. You've got to look back and think of where you've got to here. But so I'm obviously Gregor Sked, Intermediary Protection, Development and Technical Manager at Royal London. I was doing a little count of this earlier. I've been in the financial service sector for just shy of 10 years, which it's not, if I'm honest, getting me past the thought of turning 30 in a couple of months' time. So I think it's starting to dawn on me that I'm in this industry for life. I spent most of my career at Standard Life. So my background is pensions. I used to go around the UK delivering presentations to workplace pension customers, trying to get them engaged with their pension. And then a few years ago, I thought, you know what, it's time for a bit of a change. Moved over to Royal London, and I have since then been working in the development and technical team, delivering presentations to advisors around protection and trying to get people engaged with talking protection and some of the fantastic aspects of it as well. But, you know, like you say, we're going to be talking a lot of real things today. A lot of what I'll go around the UK talking about is real topics. You know, it's not always a product push. It's sometimes talking about some of the slightly more taboo topics and some of the more uncomfortable topics as well. So yeah, a lot of people probably have seen me out on the roads or virtually. We do quite a lot of writing in the press and in the various different trade medias as well. So yeah, various different formats. I'm online. Hopefully it's all good.
Nice one, Gregor. And yeah, I think, your point about being stuck in the industry, mate, I think nobody thinks I'm going to join financial services. It just happens, doesn't it? But what an industry to be in. And when you kind of look at, furlough and all the people having difficulties during COVID, I think we were in a pretty solid industry, weren't we? So
Absolutely. It's, you've got to be grateful for being in this industry, and you're at the heart of a lot of movement around the economy, which we're going to be looking at a lot of today. It's a huge important focus point.
Yeah, definitely. So look, massive talking point, as I mentioned at the start, is the cost of living crisis at the moment. You've only got to look at the news. You've only got to look at fuel prices, gas and electric prices, bills dropping on people's doormats. And there's a hell of a lot of talk around, the crisis right now. I mentioned that, in my intro, Royal London have been doing a lot of positive stuff around this and trying to be really at the forefront. And I guess, can you provide us with a bit of background around the cost of living crisis from your point of view, really?
Yeah, you say it's an incredibly big talking point at the moment, and very, very emotive as well, because it's something that I think there's very few people that are not impacted by, like you said, the crisis that we're seeing. And I think we can all relate to some of the implications of the cost of living to some degree. We've been doing a lot of work around this in our team and wider at Royal London. So we've been doing a lot of research. We've got some pretty interesting statistics, and naturally we've come across a lot of interesting statistics as well. Some of the things we've been reading recently about, latest UK inflation figures are actually bringing a lot of bad news for households. And the consumer price index reaching a new high of, I think, 10.1% in July. Bank of England looking at revising its forecast to predict inflation, CPI inflation, to about 13% before the end of the year. And it's crazy to think of what's potentially coming down the line. We're going to be facing pretty tough decisions if we already haven't done. And I think, again, some of the statistics I've read, about 89% of adults in the UK have reported an increase to the cost of living. So 89% is it's a staggering percentage. And I think on the surface of it, it does seem like the world is coming to a bit of an end, and we should all be investing in doomsday bunkers, and I kind of get that feeling. But I think in reality, we have faced challenges like this before. And if you look back to 2008 financial crisis, to some degree stemmed from, I guess, products that were very poorly and widely sold. People were generally packaging up fairly dodgy looking mortgages, selling them on as assets to banks, and they were looking at that as some pretty profitable opportunities. And suddenly the crash and the financial crash, and you definitely came from there. That's slightly oversimplified, but we have been here before. It's far from new territory, but that absolutely doesn't make it any better. I think what we're seeing now is really a set of new problems. I think what we're facing now is a bit of an amalgamation of a whole bunch of things. We've got geopolitical instability. We've seen an awful situation with Russia and Ukraine, and that itself is leading to a humanitarian refugee crisis. We've got the fact that Russia and Ukraine are huge producers and exporters of agricultural products. That's making significant price increases to international markets for food and beverages, essentially. Large reason for why some of the costs are so high at the moment, and that's not just UK wide. That is globally. We're seeing this level of inflation. We've got the pandemic. We're not fully gone and done from the pandemic, are we? We're still living in the midst of it, albeit at a slightly more positive angle. I think we are slightly more at the tail end of it, but we are still recovering from it. Nobody saw that coming. It has impacted the whole economy, and on top of that, we've got Brexit. I think regardless of how you viewed it, how you voted, I think the impact and actually the implementation of it has somewhat been masked by some of the other issues that we've just mentioned. I think we are probably still to see a lot of the impacts from that. And then on top of all that, you've got the inflationary crisis that we're going to be focusing a little bit on today, and arguably driven by a lot of the combinations of what we've just mentioned. I think there's speculation from what I've heard around the crisis may be lasting a little bit longer in the UK than elsewhere, but I think really time will only tell on that one. I think to kind of sum up that slightly doom and gloom introduction, it's not going to be easy. The last few months have been far from easy, and I think it's incredibly difficult times still ahead. But whether that's households having to make significant cutbacks from the costs, there's no sign of this ending anytime soon. On top of that, we are going into our first winter, at the tail end of COVID, on top of the cost of living. Are we going to be seeing another challenge from a winter where people can't afford to turn on their heating? What impact is that going to have on the NHS? They're already at crisis level. Are we going to be seeing an even greater burden put on them? It is a slightly gloomy start, I know, but I do like to think that there is comfort in knowing that we have faced difficult times before. We've come through it. I do think we will come through it again. And for those listening today, as I said, we are at the heart of a fantastic industry that really can play a big role in helping try and drive this positive change in a slightly negative world. So yeah, slightly gloomy start, but I think we will get through it.
Yeah, absolutely. And obviously, as you said, there's a lot of different things affecting a lot of different areas, but we've seen things like that before, and like you said, we have got through them. A question that we're kind of interested to get views on as well, and obviously, we'd like to ask you is what impact the cost of living crisis do you see is going to have on protection?
Yeah, it's a great angle, and it's one that we've done quite a bit of work on recently. Given the nature of the conversation we tend to have, we did a few months back. We did some research around generally the cost of living, and me with a protection hat on, found a couple of results quite interesting. One of them was around a fifth of the respondents said that they were going to borrow their way out of financial trouble. 7% admitted that they simply don't know what they're going to do. 5% said they might consider short payday loans. In our industry, we know the value that protection has. We know it's a very difficult product to sell. It's a very challenging, it's a taboo topic, as we say, death, serious illness. It's not a topic that people want to be thinking about. But at the same point, the big challenge is how do we keep people engaged as well with protection? Because, if people aren't wanting to think about this negative topic, do they want to get engaged about it at a time when costs are quite high? For those that have protection policies at the moment, it's going to be very, very easy to look at some of these outgoings if they're not engaged with it and think, actually, I don't really remember what that product is. I don't know what I'm paying that monthly direct debit towards. I don't know where it's going. What is it? Let's just scrap it. Let's just cancel it. And we've maybe saved 30, 40 quid in the process, actually not realizing that, the long-term implications of doing that. I think that is really where we're seeing a lot of advisors at the moment concerned about, is how do we keep individuals engaged with their protection policy so that they're not cancelling it, and how do we try and discuss or sell this product in an environment which is going to be very heavily driven on cost and trying to find an extra bit of spare change to, so to speak, to pay for it. I think that's the big issue that we're seeing. I think I'd like to think a lot of providers and peers are feeling a similar type of vibe around that being the big concern going forward.
Yeah, definitely. I think listening to what other people have kind of said that their solution is going to be is interesting. And obviously the biggest one that we're obviously going to be hearing is going to cancel my protection. So obviously, with this in mind, we as Primis and also our brokers will be keen to hear any top tips to help advisors talk protection when money is tight. What can you share?
Yeah, so I actually have come up with a few of my own sort of top tips, and these are ones that I think do stand quite a bit of ground. So I think the first one that I would say is setting the level for keeping the clients engaged is actually, if we're talking with the clients at a remortgage, if it's a brand new client, if we're doing a protection review, remind them what they actually have. Remind them what the policy is at the moment. It may well have been a few months. It might even have been longer since we last spoke to them about protection. So those reasons that maybe why they saw it as a beneficial option to purchase initially may well help you a distant memory. So that gentle reminder as to what the policy covers might ease some concerns, even just initially, around where that monthly direct debit's actually going. It doesn't matter if they took it out initially for mortgage protection, if it was income protection, critical illness, if it was family income benefit. The discussion initially was had so that they could make sure that they could repay their debts, maintain their standard of living if an unexpected event occurred. Has that changed? Just because money's tight, has that realization or that need to repay debts, maintain their standard of living changed? I'd suspect more often than not it's not, and if anything, it's probably even greater now. As I said, money's probably going to be a big concern, but have those concerns, have those risks actually changed? So I'd say, firstly, remind them of why they took out the policy initially. I think secondly, value. It's very hard to miss the word value throughout our industry at the moment. It is a key phrase that I see used all over the place, and for really good reason. So I think going back to what we mean by help clients understand the value of their policy. So how do we engage clients with something that is, as I said, quite an unpleasant topic to think about? It's a difficult conversation. It's often about death, serious illness, inability to work. I think the other thing is looking throughout the industry, and particularly from my time working in pensions, protection is a very intangible product. You can't really see it. You can't feel it. You can't touch it. Protection, pensions, investments, you can generally somewhat see. Your bank account, you can log on, you can see it, you can make transactions, there's a visual element to it. Protection, other than ongoing reviews, there's very, very little in the way of actually knowing what you get for that money and what actually it is. So I think if you did ask clients, what do they consider the value of a protection policy, they might say it's knowing I've got a bit of peace of mind that if something happens, if I went off work sick, if I was ill, I'd get a sum of money that would help me. It would help my family. But is that really going to be enough when times are tough to keep them engaged, to let them think, actually, I need to keep a hold of this product? for something that they think I might never actually use as well. So I think one of the things throughout the industry, most providers these days do tend to offer some form of additional support services. And these are just, I think, a fantastic aspect of protection. And they can offer assistance for various different needs, mental well-being, virtual GPs, you can generally access 24/7, dedicated nurses, a variety of different treatments that individuals haven't got access to over the NHS. Even things like legal and recruitment support services. A lot of these added value services actually can really be quite beneficial towards. So business owners, have they ever thought about making the most of some of these added value services and actually seeing there's value in them accessing these services when they could also be going through some pretty difficult times? So I think, number 2 tip would be try and use some of these added value support services to really play on the value that the policy has, and not to overlook the fact that if you cancel this policy, you might not have access to a lot of these services that, can often be taken for granted. We talk about mental health services, mental health support. Accessing those services, it can be pretty tricky at the best of the time. Protection policies generally offer some form of support to individuals for those services. I think the third thing I would say, and the third thing we've often been doing a lot of work on recently, is around offering out lifestyle reviews. So has a client's situation changed in such a way whereby maybe they've changed their job, they've maybe changed their hobby, maybe their recreational activities, maybe they've lost some weight, maybe they've stopped smoking since the policy started? If that is the case, you can generally ask, I think it varies on the provider. We'll take Royal London as an example. You could ask us if a client's gone through some of those changes to review the terms of the policy. It could result in a reduction in premium. It could result in a removal of an exclusion. So lifestyle reviews can go quite a long way to try and help, even as bring the cost down, if not remove exclusions or so forth. So lifestyle reviews can be really advantageous, and again, often overlooked on the protection conversation. I'd say probably the fourth and final tip from this little section, I would say, is reinforce what it means to cancel the policy. If you're cancelling a protection policy now, yes, you might save an extra 20, 30, 40 pound a month. And what does that mean long term though? If you're cancelling the policy now, yes, you may be able to have that extra bit of money in your pocket, but if you are going to cancel a policy now and look at taking out in 5, 10, 15 years time, what's the cost going to look like of the policy at that point in time? Protection policies generally will, in terms of price, increase with age. There's also a lot of other factors within there, but the older you get, the more expensive the product generally will be. So, why would you want to cancel the policy here and now to only take it out 5, 10 years later, and it's going to be a lot more expensive? So I think reiterating the importance of what it means to cancel the policy now versus taking it out in 5, 10, 15 years, I think is going to be is another top tip, I would say.
Couldn't agree more, Gregor. 4 great tips there, and I've just wrote down all 4 headers of those myself. I think it's important we remind brokers some simple stuff, and that whole cancellation piece. We've been talking internally at Primus at the moment, and I don't think we've been hit just yet by the cost of living crisis with people actually cancelling policies. So if I was a broker right now, I'd be wanting to be really proactive about encouraging my client to come and talk to me before they make those decisions, because you're absolutely right. There are consequences if they cancel that now, i.e. more expensive in 10, 15, whatever years time, or even worse, they need to make a claim on a policy because something, really bad's happened and unfortunately they've cancelled it and it's not in place. So you make some really good points. Thanks. I guess, further to that question, and again, putting myself in the shoes of a broker, if I was sitting here today, if I was a broker, how could I future-proof those protection policies that I'm arranging for my clients right now?
So that's a great phrase. I love that phrase, future-proofing. I think it's it's got a lot of connotations in there. I think going back to what we were saying about the cost of living, the costs are just increasing at, and I hate using this word because we've used it so much over the last couple of years, but unprecedented levels. It really is. And it's something that I never thought I would be seeing at the rate that things are increasing. You don't need to look far to see some of the rising costs and what their impact and what the impact's been. You mentioned earlier energy bills, food shopping, mobile phone contracts, even everything is just going up at an incredible speed. I think in there's an easy opening to talk about income protection on its own. How would somebody pay for those necessities if they had to in the future go off work sick? And you've got the added burden of inflation on there as well. Do they run the risk of having to make even more cutbacks over a period of time? If they are taking some extended amount of time off work sick. I think the real thing for me when it comes to future-proofing protection is with indexation. I think indexation is a hidden gem of protection policies. I say hidden, it's a very well spoken about topic, but actually in terms of the number of policies that are indexed, I think there can be quite some surprising numbers around the number that aren't. But actually index linking policies like life assurance, income protection, critical illness can be very, very valuable. Mainly for the fact that it can keep the level of cover at the same rate as the real cost of living. I think that's why else would you go against indexation for that reason? Every year a nominal rise in the premium increases the potential payout, and really what it's doing is it's trying to ensure that it keeps pace with higher living costs, salary, everything that we're seeing at the moment. I think indexation is particularly important for income-based products. So we're talking income protection, family income benefit, whereby the level of payout is generally selected to maintain a chosen type of level of lifestyle. So it's really important that monthly income is able to pay for the things that it was intended to do when it was set up. But yeah, so I would say indexation in terms of future-proofing indexation is really, really worthwhile considering, because it's about building in the value. And I think customers know that for that relatively short increase in premium every year, that the sum assured is going to keep in line with the rising costs, and hopefully it'll be more affordable, more manageable than changing cover every 5, 10, 15 years, as we said. So the other thing that we tend to see is when indexation is applied onto a policy, every year, annually, we write out to the client to ask them if they want to have their policy increased by their chosen indexed amount. And we've seen that annual reminder is actually a pretty good way to keep clients engaged with the policy as well. They get that annual reminder, they think, okay, what's this? And again, could even well prompt that conversation with their advisor to be having that discussion, or to remember what the benefits of it are, versus not having it at all, or even worse, cancelling it altogether. So yeah, I would say for future-proofing, indexation is just it's a huge benefit.
Excellent points. Thanks, Gregor. So, look, I think I'm really conscious of time, but I guess we've covered a hell of a lot there with just probably 4 or 5 questions. I think it's really good to see Royal London's thought process around this. And I guess, if there's a clients out there who need help from the broker, go and talk to your broker, and you've got people in places like Royal London who can absolutely give some support and help. So I guess, on that note, I'm going to wrap up the vodcast at that point, and thank you for joining us, Gregor. A really important topic. I don't think it was all doom and gloom, because I think hopefully people have taken away some key activities they could actually go and have a conversation about. So thank you for your input, mate. Much appreciated.
Thank you. Thanks, Matt. Thanks, Nikki.
We'll see you soon. Thanks, Gregor. Take care.
See you soon.
Bye.